Hi everybody, this is Lara with your weekly video for US oil for the trading week ending Friday 11th of February. I'm recording the video an hour before New York's closed, so I don't have final data for the last session and it's not on the technical analysis charts, but it is a bullish session and it fits the Elliott Wave count. I'm expecting price will still continue higher. The next target is 100.74 to 103.71. It's a small zone. Elliott Wave analysis first, classic analysis last. The alternate Elliott Wave count's been invalidated. I don't have a new alternate for you at this stage. At the monthly chart level, this wave count is very bullish. It sees this movement from this high to this low as a counter trend movement. And it's not possible to see this as a motive wave structure, which means this is against the larger trend at the quarterly chart level, which means that I'm expecting a third wave to move beyond the end of this high, which is the first wave. Supercycle 3, I have beginning here, may only subdivide as an Elliott Wave 5-wave impulse. That'll be labelled at cycle degree 1, 2, 3, 4, 5. When it arrives, 2 may not move beyond the start of 1. 1 is incomplete with the fifth wave extending. Let's take a look at this at the weekly chart level, where this high and this low, the end of 3 and 4, is this high and this low, and here's the start of supercycle 3. An incomplete cycle 1, when it's over, there'll be a bear market for cycle 2, but we're not there yet. Cycle 1 unfolding as an impulse, labelled at primary degree, primary 1, 2, 3, 4, 5. Primary 1 is not extended, primary 3 is extended. When waves extend, they do so in price and time, and you can see their subdivisions at higher time frames. This wave looks not extended, this wave looks extended. I am expecting that primary wave 5 will also be extended, with intermediate 1 and 2 complete and intermediate 3 continuing higher. When it's done, intermediate 4 must unfold, may last a few weeks, and may not move into intermediate wave 1 price territory, and then intermediate 5. Within intermediate 3, no second wave correction may move beyond its start below 62.44. Let's take a look at how intermediate 3 is beginning from this low labelled intermediate 2. This low down here, intermediate 3 unfolding as an impulse with minor 1, 2, 3, 4 and an extending minor wave 5. Let's just go back to the main wave count. The weekly chart, I'm expecting minor wave 5 to be extended to take intermediate 3 high enough above intermediate 1 to allow intermediate 4 to unfold and remain above wave 1 price territory. The targets would see that achieved. At 100.74, intermediate 3 would reach 1.618, the length of intermediate 1, and not too far above that. At 103.71, minor 5 would reach equality in length with minor 3. Minor wave 5, beginning here, has already passed equality in length with 1. It's past 1.618, the length of 1. The next target for it to... minor 5 has not passed 1.618, the length of 1, but if it reaches equality in length with 3, that's fairly close to where intermediate 3 reaches 1.618, the length of 1. When I'm able to calculate targets at more than 1 degree, I play with numbers and I try and come up with calculations that are really close together, and this is reasonably close together, and so if you can do that, you can find a target zone with a higher probability. Minor wave 5 looks like it's extending. Within it, minute 1 and 2 are over, minute 3 extending, minuet 1 and 2, minuet 3 extending, subminuet 1 and 2, subminuet 3 extending. It's not possible from this low to this high to see a complete 5-wave structure. You'd see 1, 2, 3, 4, 5 here, would see the third wave the shortest. So it doesn't subdivide up here, it doesn't subdivide as an impulse, it doesn't subdivide as a diagonal meeting Elliott Wave rules. So this looks like a series of overlapping first and second waves. The conclusion there is this is actually for the short term a fairly bullish wave count. This Elliott channel, let's go back to the weekly chart and see how this is drawn. I've drawn it from this low here. This is the important end of supercycle 2 and the start of supercycle 3, to this low down here and push to copy up here to contain all of this movement. So this is a best fit channel. If price comes up to the upper edge of that channel, look out, we might find some resistance there. Keep drawing an acceleration channel as price continues higher. From the end of 1 to this high, place a parallel copy on this low. This may assist to show where deeper pullbacks may find support. Within -5, no second wave correction may move beyond its start, below 81.92. Classic analysis now, which is fairly bullish at the weekly chart level. Up to this week here, volume is pushing price higher. This week here, last week, volume is not supporting upward movement, but 1 week doesn't change the overall trend of volume pushing price higher. Now we're getting an inside week, although at the end of the week for Friday's session it's moving price higher, so it will probably close green. Let's see if it has support from volume, but even if it doesn't, 2 weeks in a row would start to give us some indication that we may be running into some weakness, but other indicators aren't seriously overbought and extreme enough for a real concern. But let's have a look at volume when this week completes. Support has held again about 84.5. On balance volume has no new range. RSI in neutral territory, there's plenty of room for price to continue higher, and it can do so for quite a long time. RSI can reach fairly overbought before we see a trend change. So conditions here aren't extreme enough to warrant caution. Well, they're not extreme at all. ADX is not extreme at all, and it is indicating an upward trend. Stochastics overbought, but during an upward trend this can remain extreme for a long period of time. An ATR flattening off as price rises is normal behaviour. At the daily chart level, ADX also indicates an upward trend. It's extreme, but it's not very extreme. It can reach a lot more extreme than this. When it gets above 45 and above both DX lines, then it's considered very extreme, and then we run into an area where we should be using extreme caution and be wary of a potential trend change. That's not the case here yet. RSI back in neutral territory. This can reach overbought and reach reasonably overbought, and then if it does that and it exhibits bearish divergence and ADX is very extreme, if those conditions are met, then we should be wary of a trend change, but not yet. There's quite a long way to go before these two in conjunction are going to get extreme enough to indicate we should be wary of a trend change. So sorry about that thunder in the background. That's a pretty spectacular storm we've got going over here. Okay, stochastics in neutral territory, but in a trending market we use RSI, not stochastics. This is here for a consolidating market. It can remain overbought for a long period of time. An ATR flat as price rises is normal behaviour for this market. That's all from me with your oil analysis this week. I hope all our members are looking forward to an awesome weekend.